So look into segment 25, classification of goods and types of customs duties. In this, we are going to discuss first the general interpretative rules, then what are the various customs duties and additional customs duties, and computation of customs duty in case of import, and rate of duty in case of set of articles, and emergency powers of central government. First, general interpretative rules or rules for interpretation of tariff. Rule 1 says that the titles of sections are for reference only. For the purpose of classification, we need to read the chapter notes and then decide. Rule 2a says any reference to complete goods also includes incomplete or unfinished goods. And for example, you are importing a car without tires, it should be classified along with car. And 2b, any reference to a material includes combination of that material with other material. Example, you are importing an article of gold with copper, then it should be classified along with copper. Rule 3a, whenever there is one specific heading and one general heading, we need to prefer specific heading over general heading. 3b, so whenever we are importing an article that is component of multiple articles or multiple components, then we need to classify it based on essential character. The example what you need to remember is that geometry box. Geometry box has multiple components, but we need to classify based on essential character. And suppose if both the headings are specific, we need to see the latter the better, that is which comes last in the numerical order, that should be taken. Rule 4, akin goods. Akin means similar goods. Based on similar goods we need to classify. Rule 5 talks about packing materials. Packing material, if it is a specific packing material used only for that article, it will be classified along with the main article, otherwise it will be classified under the separate heading. Rule 6 says that the classification, whenever you are doing the classification, should be at the same level, means the comparison should be at the same level. Then normal customs duties payable. All these sections are of Customs Tariff Act. Normally we need to pay basic customs duty, social welfare surcharge, IGST and GST compensation cess. Basic customs duty we have standard rate and preferential rate. Whenever we are having agreement with some countries with which we are making a trade agreement, then preferential rate will be applicable, otherwise standard rate will be applicable. That will be at the applicable rate given in the question, compute on the assessable value. Then social welfare surcharge, it will always be 10% of basic customs duty. Integrated tax at the rate of GST rate in force on assessable value plus all customs duties. Compensations is also same at the rate given in the question on assessable value plus all customs duties. These are the usual normal customs duties. And in the past, on imports there used to be countervailing duty and to counterbalance excise duty, whereas special additional duty to counterbalance sales tax. Now on account of GST, its applicability is limited to few goods. And second point, in case of exports, only basic customs duty is applicable, and if exports are chargeable to duty, there is no social welfare surcharge. Social welfare surcharge is only on import. Then in case of warehoused goods sold by way of transfer of warehouse receipt, IGST will be computed on A. A is regular, assessable value, basic customs duty, social welfare surcharge, or sale value of such warehouse receipt, whichever is higher should be taken. Then next to note, where the basic customs duty is nil, social welfare surcharge is also nil, and preferential rate under section 2 are those imports which are made from country in which India has trade agreement. And for computation of IGST and GST compensation cess, additional customs duties. What are the additional customs duties? Safeguard duty, anti-subsidy duty and anti-dumping duty shall be included. So therefore we need to add everything, and finally only we need to compute GST. Then what should be taken as assessable value in case of sale on high seas basis? In case of sale on high seas basis, we need to take assessable value as the last purchase price, means the price at which the person is purchasing. High seas sale means original importer transfer the documents of title to the subsequent buyer. That subsequent buyer is clearing, so therefore he need to take the last purchase price at which he purchased as the assessable value under customs. But in case of warehoused goods, so that is I am importing, kept the goods in warehouse and transfer the warehouse receipt. Now in that case, assessable value under customs will be the original import price only. And suppose if I am only importing, I am only clearing, so then in that case also original import price will be taken as assessable value. And what is the method of computation of IGST? In case of sale on high seas basis, the normal way, that is assessable value, basic customs duty, social welfare surcharge, everything we need to take. For first case and the last case, it is a normal way only we need to compute IGST. Only in case of warehoused goods, we need to do the comparison. What is that? The normal way or the transaction value of such sale, whichever is higher. Then emergency power of central government to increase. So in case of import, they can increase the customs duty, but in case of export, they can impose the customs duty, can increase the customs duty by notification official gazette only if the circumstances exist. Then what are the additional customs duties on import? We have safeguard duty, anti-subsidy duty, anti-dumping duty, only three. And safeguard duty, fair exports, anti-subsidy duty, unfair export by exporting country, and anti-dumping duty also unfair export by the exporter. Because in case of anti-subsidy duty, so the country, exporting country has given the subsidy and that article has been imported into India, so it enjoys the export subsidy. So therefore it is an unfair export made by the exporting country. Anti-dumping duty, the person is dumping goods to India at a price less than their selling price, so it's an unfair export made by the exporter. But safeguard duty is levied in case imports are made in large quantities, that is not unfair, it is a fair export only made by the exporter. Section reference 8B, 9 and 9A. Authority to levy. All these three are levied by central government upon receipt of complaint or information. And relief against serious injury to domestic industry on account of imports in large quantities. All these three are leading to serious injury. So serious injury, whenever it happens, then only it will come. Serious injury to whom? Serious injury to the domestic industry. On account of what? Large quantities means this safeguard duty. On account of subsidy enjoyed in export pricing, anti-subsidy duty. On account of import of goods at a cheaper rate, then anti-dumping duty. What is the extent of relief? In case of safeguard duty, to the extent adequate to prevent or remedy, rate shall be specified in the question. Here also same. But in case of anti-dumping duty, it is lower of dumping margin or injury margin. Dumping margin means sale price in that country, that is exporter country, minus the price at which it is exported to India. Injury margin means normal selling price in India minus landed value. While taking landed value, we need to take assessable value plus basic customs duty, social welfare surcharge. In all these three cases, investigation is required. Until completion of investigation, they will levy provisional duty. And what is the duration of provisional duty? In case of safeguard duty, 200 days, anti-dumping duty 4 months, anti-subsidy duty 4 months, anti-dumping duty 6 months. What will happen upon finalization? Upon finalization, either the differential duty will become payable by the importer, or if excess paid, that will be allowed as refund. Duration of levy 4 years plus 6 years, maximum 10 years, but these two will be 5 years plus 5 years at a time after review, and it can be extended for any unlimited time period. And we had protective duty before under section 6, that is now omitted. Then next, exemption from levy. If you see safeguard duty, imports by 100% EOE or SEZ, that point is common for all three. Imports by 100% EOE or SEZ is exempted for anti-dumping duty, anti-subsidy duty and safeguard duty. However, it is clear to DTA, then they need to pay. And second point in safeguard duty, if you are importing article from a country that is developing country, lot of developed countries are there, but import from a developing country that does not exceed 3% of the total article imported into India, then there won't be safeguard duty. Or if you are importing from more than one developing country and each developing country with less than 3% taken together, aggregate does not exceed 9% of that article into India, and import from notified countries. Whereas for this anti-subsidy and anti-dumping duty, if articles are exempted in the exporting country, there won't be anything. Or if imports made by WTO, World Trade Organization countries also, there won't be this, and imports from some notified countries. Retrospective levy, last two, that is anti-subsidy and anti-dumping duty only can be levied retrospectively, not safeguard duty within 90 days prior to the date of notification. And if within 5 years they have not taken any decision to extend, automatic extension for 1 year. Then in case of import in large quantities, so either they can go for safeguard duty or they can resort to tariff rate quota. And anti-dumping duty and anti-subsidy duty is mutually exclusive. Suppose in case of anti-dumping duty, if the sale price in exporting country is not available, then export price to third country should be taken. If that is also not available, then we need to take cost of production plus usual profit margin. And circumvention will happen in case of anti-subsidy duty or anti-dumping duty, in case when you are importing the article by changing its name or description, or when you are importing the article in unassembled or disassembled form, or by changing the country of origin or any other manner. you try to escape from anti-subsidy duty or anti-dumping duty, then in that case, government will not do fresh investigation, but the same notification which they have initially given will be made applicable to these goods for which you change the name or you change the country of origin or you imported in unassembled or disassembled form. Absorption of anti-dumping duty means whenever exporter reduces his price, export price, without any change in the manufacture, in that case, he is trying to absorb the effect of anti-dumping duty or anti-subsidy duty which is levied in India. So in order to counter that effect, government can enhance the anti-dumping duty and anti-subsidy duty. That is this point. And importer can make appeal against the order for levy to SESTAT, that is tribunal, within 90 days from order. And next, old customs duty relevant in current scenario. So alcoholic liquor for human consumption, we need to pay excise duty, CST and VAT. But on import only CVD will be applicable, which is a counterbalance of excise duty. On petroleum products, we have to pay excise duty, CST, VAT. So on import, we need to pay CVD and SAD. On tobacco and tobacco products, we need to pay excise duty and GST. So on import, we need to pay CVD and IGST. On all other goods on local, we need to pay GST. So on import, we need to pay IGST. So therefore, CVD is applicable in case of alcoholic liquor for human consumption, petroleum products, tobacco and tobacco products, whereas SAD is applicable only in case of petroleum products. Then computation of customs duty, first we need to take the assessable value, and total 3 steps. In step 1, basic customs duty, social welfare surcharge and CVD. And while computing CVD, so basic customs duty at the rate given on assessable value should be taken. Social welfare surcharge will be 10% on basic customs duty. CVD will be given in the question on assessable value, basic customs duty and social welfare surcharge. This is step 1 called as customs duty exclusive of additional customs duties. Then next step 2, additional customs duties we need to take, that is safeguard duty, anti-dumping duty and anti-subsidy duty. If you add that, that will be customs duties excluding IGST and cess. Finally, we need to take GST, IGST. While computing IGST, and everything we need to add, and GST compensation cess also same way, SAD also same way. But when IGST and GST compensation cess is there, SAD will not be applicable, because SAD is applicable only in case of petroleum products. This total is known as the total customs duty payable. Then there is something called as agriculture infrastructure development cess. If that is given, we need to take, otherwise not required. But cess, this is only on some articles. So practically in many questions they will tell ignore AIDC like that. So if it is there, it should be taken on the customs like assessable value, whatever assessable value is there, on that only it will be taken. But 99.99% it will not be there in the exam, because they will clearly give that there is no AIDC like that. If it is given only, I am telling you, it should be taken on the assessable value. For safeguard duty, computation on assessable value if the question is silent. Then rate of duty in case of goods imported as set of articles, section 19. Suppose you are importing set of articles. If articles are liable to ad valorem, duty liable to same rate, no issue, chargeable to that rate. Duty liable to different rates, separate value ascertainable, accordingly we will pay. Suppose if it is not ascertainable, single value is there, but it is a compulsory article supplied along with the main article, then we will take the rate of main article. Otherwise, entire consignment will be chargeable at the highest rate. Even articles which are not dutiable also will become dutiable because of this. Ad valorem means customs duty payable as a percentage of value. Specific duty means customs duty payable on the units of measurement. So this is the summary of our discussion related to these types of customs duties. Okay.